Good day. Ira Epstein of Linn and Associates with your weekend edition of your metals market update for this Friday, the 22nd of February, 2019. We're just after 2:30 as we're recording this, and we're hearing tidbits as to what's going on. It appears that the Chinese delegation, the head, the vice premier, is going to stay another 2 days with our negotiators, our lead negotiators, working out deals. And the deals that they're working out, it appears that they're talking of buying over $1 trillion worth of agriculture, maybe chips and other products, actually about $1.2 trillion. There's talk of that they've reached agreement that the currency, I'm talking the yuan, not letting it depreciate dramatically. They're getting closer on other issues, but where the big divide still hangs is forced technology transfers, intellectual property rights, and how do you measure everything the Chinese are doing? The one thing China is proud, large, going to be a massive size economy, bigger than they are now. We know they'll be the biggest in the world via their population. Well, how do you sit there and rein it in with them still saving face and not wanting to give away everything? That is what this is about. The good news is that President Trump is already saying there will be a meeting in Mar-a-Lago, and that meeting will be at the end of March. And if that is the case, I don't see how he actually does anything but, for the moment, suspend the other tariffs that might go on March 2nd, hold back, keep his foot to the fire there, making sure a deal is going to happen. But I think this is a positive, and the stock market is reacting to it in a positive manner. Now, copper's the other market. Remember, copper market is what we call Dr. Copper because it tells you about the world economies. It has been on a tear to the upside. Is it sees an opening in the trade delegations making headway? This is good news. So the copper market responding. $3 probably a target zone. Interest rate futures up a little bit today. You know, you would think that with that good news, maybe real rates would climb. They didn't. They actually fell a bit. And energy's flat as can be. We lost a few rigs this week, about 4 of them, but nothing to speak about. Now, on the weekend edition of my metal update, we start off with a monthly bar chart. And in essence, you're very much in sideways action. Resistance comes in between 1354 and 1369, the upper Bollinger Band. Momentum is up. You have not taken out a previous high, so you still have the pattern of lower highs, lower lows, but that gets negated if prices close over the 18-month moving average of closes, which it's now done, if we take a look here, 3 weeks in a row, and during those weeks, well, actually 3 months in a row, this is a monthly chart, and as the market has worked with that, it's been able to come up, you know, between the daily, weekly, and monthly charts. Sometimes I misspeak. This is the weekly chart, and on the weekly chart you've gone from 1176.50, which was the lowest close we recently saw. That was in August, and here we are back to the 1329 level, and we have added approximately $11 for the week. When we take a look at a weekly bar chart with no studies on it, this is how it looks. When I put on my swing line study, which helps me at least, and this is what I teach in my charting course, look at any chart so I can determine is it trending, and if it is, what is the risk associated before that trend would be broken via the swing line. And you'd have to get under the current pattern 1301.60 in the gold market in order to break the pattern of higher highs, higher lows. Therefore, this market is still bullish. When we look at crossovers, you had one big one here, and that was when the 18-week moving average of closes, see it right here, got over, it actually did it right here, got over the 200-week. Market kept moving, and new highs started forming right from that point on this particular leg. There's more to come if you get the, in my opinion at least, if you get the 18-week over the 100-week. These are just the crossovers that traders watch. It might put into play these old highs that we have right there. When I look at the Bollinger Band, if you'll look at it, you came out of sideways action pretty much right here. And when you first come out of sideways action, it's not uncommon, be it to the downside or the upside. We can go back here if we had some sideways action, but I'll stay with this, to challenge the upper Bollinger Band, which it did. If the market backs off right away, what's under that was the 200-week average. Now, if that wasn't there, you'd have the 18. But what is resistance in the past, and I think you'd agree it was, could become support in the future. From there, the market starts an attack of the upper Bollinger Band. The 100-week average is waiting for the market, and it goes there, gets over it, and stays over the band. Now, when you stay over the upper Bollinger Band, this black dashed line, understand the logic here. 5% of the time, the market will stay under it. I, in my infinite wisdom, I'm laughing at that, of course, look at the market, and I started doing counts as to how many times in a row a market would settle consecutively above the band or consecutively under it. And I was able to walk away and say to myself, as a rule of thumb, each consecutive number takes away one of those 5 percentage points. Now, taking away, you eventually get to 0, which tells me the probability is the market won't stay over the upper Bollinger Band. It just means, if you think about it, first off, maybe it's a profit-taking spot for some people. Next off, what happens is maybe it's a better entry point if you're being patient. Look what happens. You get up to the bands, you back away from them. So that's what this market is doing. This market is one where it's saying when it closes over that band, be patient. You may end up paying higher, but you won't be buying into an overbought market where you get long here and you get a correction that, because of margin, can force you out of your position. Doesn't look like a lot, but believe me, when you're up right here, this is the real world, and let's assume you bought at 1,340 and the market drops down on you to 1,280. That's a $2,400 swing. You might think it's nothing. It's a big swing. I own brokerage firm. I know what I'm talking about. And that's what scares the client out. So what you're trying to do in futures is, as best as you can, control your money, control risk, and get into something or a position where you can feel comfortable with it. That's what I think a lot of this is about. When we look at the gold with the stochastics on a weekly chart, the way that I teach it, don't get overbought or oversold. They do on a daily. They're either friendly, not friendly, pointing up, pointing down. This is still pointing up. Anything going sideways over 80 is still pointing up. The gold-silver ratio is getting to a point up here at the 84 level on the weekly chart where I would expect silver starts doing a bit better than gold if it gets up there. In GLD, the popular ETF, momentum is up. The market is still moving, if you will, to the upside with everything, not backing away from it. Let me get this if I could and get rid of this important call. I don't want to redo this. So you got to your resistance point, you backed off a little bit today. When we go to GDX, the miners, higher lows, higher highs, backed off a little bit. And as you can see what the market is doing right here, it's keeping its momentum. These charts look a bit different than the daily. They're stronger than the daily. So I like often to look at the daily and the weekly charts. In silver, you tell me what the resistance is. I'm going to argue it's the 100-week average. You dropped away from it. You came back up this week, challenging it one more time, and you backed off about 30 cents from that again this week. Okay, but the momentum in the market's still up. The trend is up on the chart as well. That's a resistance point. If you can clear it, maybe you go to the upper Bollinger Band. The copper market's in a breakout mode. You had the sideways action. This is what I will call sideways. The first stop, if you get through the top side, would be the 100-week average, and it went right through it this week like it didn't even exist. And momentum is still pointing up. So this, to me, could make this a trade bottom, and we'll find out, obviously, if that happens. But that would fit in with some of the brokerage firms that are saying that they're looking for about the 310 level overall in copper. Wouldn't surprise me. In the platinum market, you're still not in a trend. You're in a whipsaw here. You're not strong enough to get to an upper Bollinger Band or to a lower band. The market has a pattern of a lower low and a higher high. And if you take a look, it's often hitting that 18-week average, but just not extending itself. One of these times it will, hasn't done it yet. The powerhouse has been the palladium, which goes up, hits the upper Bollinger Bands or gets over them, pulls back, and rides them. Momentum's still up. When you lose the red line under 80, get concerned. There's another thing. You're getting your switch over now where the March is going to expire on you, and you've got the next month coming up. So the lead month may not be as strong as the back months as traders get out of one and probably roll positions into another. Remember that. Last, we have the dollar index, which is fighting a battle right now, right at the 18-week moving average of closes. I think you see that. The market has had an easier time of hitting resistance on the top side than getting back to the Bollinger Band. But all of this, if we look at it, is sideways action. Which way do we break out? There's been so many people that are bearish in this market long term. I know you've heard that over and over. Go back and read in December the prospects for 2019. Yet they were surprised as the market has spent a good part so far of 2019 in what? Higher lows, higher highs, an uptrend. For the past 3 weeks, basically, it's been able to stay over that 18-week average. But this has really been the number that it's hanging at, that number, and we're going to see which way it can break out. You know, if you're anything like me, you run into uncertainty about your trades. I do, and if you think you don't run into that, foolishness on your part. Nobody's a machine. And you get your disciplines, and I keep my disciplines. The one thing I'm proud of is just how disciplined I am. I'm exceptionally so. I don't take flyers per se. When I analyze a chart, I pride myself that I'm going to analyze it by I can take the name off the chart and analyze the chart action the same way each and every time. But think about it. You're ready to make a trade, or you're wondering should you make a trade, and you're questioning what's going on. Well, I do a review every morning, 8:30 a.m., I record 40 charts covering these ideas. And it'll be all the major sectors in the futures market. The chart action, what I think the pros are doing. I'm really going to delve into the technicals. I will bring up any of the fundamentals from that time, just before 8:30, that I think could be impacting the markets. And the one thing I love to do is throw out the trade ideas. Day trades, position trades, option ideas if I see that the market's going sideways. Maybe you buy a put, buy a call. Maybe you want to keep the market going sideways. You do a strangle. I'll mention these type of things over and over. Seasonality. I'll bring up seasonal charts and try to make an argument for you as to why resistance or support at a certain point you should be looking for based on some seasonality factor. I put it together, and my idea there is to help you help yourself. It's another person to knock an idea from. The difference between us is I was brought up in this industry where you'd walk in these buildings and it was impossible not to run into other technicians, and we would all be here 8:30 at night poring over charts, talking things through. You don't have that ability. You really don't. The internet does one thing. I want to bring that back. And when you bring it back, it becomes personal. And then every 2 weeks with this, you get an invite to a live webinar where you can ask questions, or you can review that after it takes place. For $7 for 30 days to give it a try, $7.95 to be exact, come on, what's with it? Just give us a call, or you can go online at our website, go under Research or Education, look at Morning Subscriber Video, and away you go. I'm Ira Epstein. You have a great day, and I will see you all come Monday.